Thank you for being here today. I have an agenda here on this slide. First off, if you can put your name and organization name in the chat, that really helps us with any follow-ups that we want to make with you. Sometimes there's just like a first name in the Zoom name that you have, so it's really helpful for us to get some context for your questions. And so yeah, thank you, Karen, for putting that in the chat. If everyone else can go ahead and put your name and organization name in the chat just so that we know who you are. Appreciate that. We also have Lonnie Silva on the call. Hopefully, most of you have met Lonnie, but Lonnie will be assisting with some of the chat functions as well. So, um, today's agenda looks kind of like a hodgepodge of topics, but I promise there was uh, some reason behind this. So basically, most of these are going to be kind of like third-party entities that may relate to some of your donations. And so first we're going to talk about intermediary organizations, then donor-advised funds, qualified charitable distributions from IRAs. We're going to touch on stock donations and then wrap it up with some program reminders at the end. So I'm going to pause on each one of these for you to be able to ask any questions you have so that we can make sure everybody's clear as can be regarding these topics. And then at the end, we'll have a question and answer time for any topic you may have. So to get started on intermediary organizations, so some of you may recall when HCTC first launched, we did not allow intermediary organizations to process your HCTC donations. Through a bill that became law last year, that those donations are now allowed for tax credits. And so that legislation did define intermediary organizations as a 501c3 nonprofit. And those organizations are obligated to disperse the contributions received from the donor to the recipient organization, meaning you. And they need to disperse it according to the donor's wishes or as directed by the donor. And so gifts through intermediary organizations are eligible for HCTC. We did see an increase of donations that came through in 2024 compared to 2023. So it seems like this was a positive thing for organizations and being able to offer the tax credit. And so definitely continue to do that. We just want you to be clear on what those entities are. And a lot of the common intermediary organizations are Colorado Gives Foundation, United Way, Gives Pikes Peak. There are other foundations out there that basically receive donations that they pass on to you as the final recipient. So we do have a variety of other ones that organizations have used, but those are some of the common ones. Are there any questions you have regarding intermediary organizations?
I do have. So when you're saying other foundations, so over here on the Western Slope, we have the Montrose Community Foundation, the Western Colorado Community Foundation. So those would be classified as an intermediate. I can't even say the word.
I know it's a
That one.
mouthful. Yeah, as long as, which my next slide is going to be on donor advised funds, but yeah, as long as they don't put the funds in a donor advised fund, then yes, those foundations would be considered intermediaries because they're a nonprofit organization themselves.
Okay,
So,
thank you.
mhm. And a note on that, there is within our Salesforce platform a note when you submit the contribution for you to, there's a question that says, is this gift through an intermediary organization? You would click yes, and then go ahead and do a search for that intermediary, or if it's a brand new one, you can add that. And we have instructions in some of our materials about how to do that. Donor advised funds. Not the most fun topic to talk about because sometimes donors are disappointed, but contributions through donor advised funds or DAFs are not eligible for the HCTC. Um, by definition, DAFs are not obligated to disperse the funds to the recipient organization like an intermediary organization is. So that's kind of the difference between the two definitions. Technically, a donor has that ownership and kind of the authority to pass those funds on to another, another recipient if they so chose to do that. They are supposed to follow, the donor's wishes on that, but it's not an obligation like an intermediary organization. And so that's the difference based on information we've received from tax policy experts on that. And so we do within the HCTC nonprofit handbook have some information on DAFs and some common DAFs that you can see on the slide. And I would just encourage you to check with the handbook before if you come across an organization that you're not sure if it's an intermediary, if it's a DAF, you can use the handbook as a resource for that. Or sometimes it's simply just looking at the website and it's right there sometimes on the website clearly, this is a donor advised fund. Sometimes it's honestly not as clear. I've had to do some digging on some of you have maybe reached out and said, "Hey, is this eligible for HCTC?" And then I do some digging and find out that the contributions are funneled through a DAF. And so what's included in the handbook are ones that we fielded based on questions that have come up. And so if you are concerned or have questions, definitely you can feel free to reach out and we're happy to look into it um, and give you some guidance on in an organization that looks like it might be a DEF, maybe an intermediary. You're not totally sure on that. Any questions on DAFs? Okay,
I have a quick question if you don't mind.
sure.
Can you go back to that previous screen? Thank you. I was just writing down those names. So what changed with the DAFs? What did the state think to change that to include DAFs?
There's nothing changed on this. They have never been eligible for HCTC and they're still not eligible.
Okay, I'm sorry. I jumped into the meeting late. I'm sorry.
No worries.
I did not read that correctly. Thank you.
You're welcome. Yeah. So yeah, the intermediary organizations like Colorado Gives are eligible, as you probably know, but donor advised funds are still not eligible.
Okay, wonderful. Thank you.
Amelia?
Yes, this is kind of a continuation of the previous question about the Western Slope. Was that Karen? Um, community funds in general, are those considered nonprofits? Do we need to research each one? Or does the fact that it has that in the name imply that it's one of these pass-throughs?
I would definitely verify that it is a 501c3 since that's by statute a requirement in order for it to be an intermediary organization. Yeah. So
Okay,
if you
thanks.
look into it, yeah, if you look into it and it is a 501c3 nonprofit, so as we mentioned here by definition, an intermediary organization for statute is 501c3. And then if it is a 501c3, just making sure that they're not managing a DAF with that donation. And yeah, and putting that
And
donation
what
through the
about
DAF.
fundraising platforms that we use? There's no problem with those, right?
That's correct. Yeah. And I'm going to have a slide later on that talks about some of the payment processors as well. So, yeah. Abigail asks if someone donates via PayPal, is that considered a DAF? So PayPal itself is not. It's just a payment processor. PayPal does have a giving fund, however, it's like a different arm of the PayPal company that is a DAF. So I would just kind of dial in on if you see something that's, PayPal, Schwab, Thrivent, Vanguard, Fidelity, some of those big names, just dive in and see, okay, not necessarily is it just a payment processor or a financial institution, it might be a DAF. So, really flagging what is in the name um, is important. So, yeah, that's a good question. So I'm going to go on to qualified charitable distributions, or QCDs. We are sometimes asked by folks if QCDs are eligible for HCTC. And they are. So if someone has a distribution from their IRA, it goes to your organization, and they're interested in the HCTC, absolutely you can offer that. I will say that sometimes donors may not be interested based on their tax situation. So you'll always want to make sure, the donor does want their QCD as a tax credit, but absolutely it is eligible. Just a note, especially for tracking within Salesforce, a QCD that is managed by a financial institution, or I'm sorry, an IRA that is managed by a financial institution, does not go through an intermediary organization. So that account that the donor has at that financial institution, that financial institution does manage, it's still owned by the donor. It's still their funds, their money, and they're the ones who are making that distribution or that donation to your organization. And so that's not why it's not really considered a pass-through anywhere through any other organization. It's just coming from their account to you. It just happens to be managed by a third party. And so that third party may send you a check, and it looks like it's written from the financial institution. And so how do you identify a QCD? A lot of times the check attachment may have a note that says it is a retirement distribution. If you're not sure, I would just check with the donor and make sure that it came from their account and that it was a distribution from their account. And if that's the case, it is eligible for HCTC. You do not have to note anything special within Salesforce unless it is a donation over $5,000, and then you will need to attach backup documentation for that. But otherwise, it's not like a special third-party notation or anything of that nature. Any questions regarding QCDs? Okay. So here's some kind of tricky situations that I was alluding to earlier on regarding PayPal as well. But sometimes a charitable arm of a financial institution may be a DAF. And so it's really important to check each platform to really determine how funds were funneled from the donor to you. So I've got three examples here on the slide that all have Fidelity in the name, but they are three different platforms. So we've got Fidelity Charitable, and that is actually a DAF, and it acts as a separate 501c3. It's not actually Fidelity Investments. It's a separate arm that they have created as a separate entity to manage charitable donations. So donations through Fidelity Charitable, for example, would not be eligible for HCTC. On the other hand, Fidelity Investments is a for-profit financial institution that may manage, an IRA or other financial account for your donors. And so donations given from one of these accounts very well could be eligible for HCTC. Going on to that next bullet point about software solutions. So they may, different software platforms may process payments or process workplace giving campaigns. And so payment processors can be used for HCTC contributions. So PayPal was already mentioned. And actually Fidelity Giving Marketplace we looked into, and it's a workplace giving platform that uses Stripe to process payments. So Stripe is basically a way to process credit card or other payments online. And so there's really no changing of hands in these situations. It's basically uh, a technology that's used to transfer money from the donor to you directly. It doesn't change ownership at any point. It just flows through their account to your account. And PayPal or Fidelity Giving Marketplace or other things that we also have noted in the handbook, those platforms are totally fine to use. I will say that sometimes workplace giving platforms do go through a DAF. And so that's why it's really important to look at our list of DAFs in the handbook that we have identified, or if you're not sure about something, feel free to reach out to us. So any questions on these situations? Okay. So what we've talked about so far are monetary donations. So basically, cash funds. Now we're going to move to an in-kind donation type, which is stock, that I sometimes get questions about. So I wanted to cover this as well. If a donor gives a gift of stock, this is an in-kind donation. So in order to qualify, it must be valued at $5,001 or more. Sometimes it's, beneficial for the donor to give it as stock. But if they do choose to liquidate it before giving you the donation, so if they sell the stock and then give you the funds, that would be considered a monetary donation. But if it does change hands as stock, then it is considered in kind. And here's one of the kind of nuanced aspects regarding stocks is the value is assessed as the fair market value on the date of donation. So that's according to statute there. And so this means it's not necessarily the date the stock was sold by a broker or another third party that liquidates the stock for you. And so the value of the gift might not equal the amount of money you actually received when the stock was sold. In order to give the donor the appropriate tax credit amount, you'll want to do some calculations regarding what is that fair market value on the date that it was donated. Because as you know, the value of stock fluctuates from day to day and even different points of the day. So Lonnie's going to put in the chat a document that includes backup documentation examples that we've put together. And so on page 2 of that are a couple of examples of how you can calculate and document the fair market value of the in-kind donation. And so just wanted to clarify that because sometimes it gets a little confusing, regarding maybe it was officially donated yesterday, April 1st, and then it was actually sold today on April 2nd. But that sold amount is not necessarily what you would submit for the tax credit. I've also had a couple of questions come in regarding liquidating stock. And so I was curious to kind of crowdsource tips if you as an organization have found any ways that work for you on liquidating stock? Do you have a third party that you work with to do that? And if so, do you have suggestions for organizations that are looking to do that but not really sure what to do on that? So if you do, feel free to come off on mute or put that in the chat. It would be helpful for us to kind of crowdsource that, and I can give that guidance in the future. But I know at least one person on the call, I believe, had that question that asked me about it last week. So Abigail says they use Edward Jones to liquidate that. So I'm assuming there's a fee involved with asking Edward Jones to do that. But it is a service they can provide, obviously. Thanks, Abigail. Somebody else uses Edward Jones. So yeah. So a third party like that will assess a fee. Okay. Good to know. And then Brenda asks, the in-kind stock donations could be accumulated of all the contributions for the year to qualify for HCTC. That's correct. So if you look at the fair market value for maybe smaller stock donations, maybe they're $1,000 each, 1,500, let's say $1,500 each. And so once they get over the 5,001 mark, then they could you could submit it as a cumulative donation. Make sure you include all of the backup documentation for each of those donations so that we can see the fair market value for each one and see how it all adds up to the total that you submitted. And then you would use the date of the final donation date. If you submitted five, accumulation of 5 different ones, just use the date of the last donation for that. Okay. You're welcome, Brenda. Any other questions on stock or in-kind donations? Okay. So this slide is kind of like a decision tree of questions to ask when you get a donation that looks like it came through a third party. The first question would be, was the gift given through a 501c3 nonprofit? If yes, then your next question is to determine, was it given through a DAF? Because DAFs are often 501c3s. So just if it was given through a DAF, then it's not eligible for HCTC. If no, if the donation was not funneled through a DAF, then the gift is eligible for HCTC as long as it qualifies otherwise, and should be noted in Salesforce as a gift through an intermediary organization. If no, was it processed via software that did not use a DAF? So, like we were saying earlier, maybe a workplace giving platform. Was it given through PayPal or Stripe or something of that nature? Then the contribution would be eligible for HCTC. I did want to note fees. So regarding a lot of the donation types we've talked about today, fees are disregarded from the total of the gift. So this means if a donor does opt to cover a processing fee, that fee amount is not included in the HCTC contribution amount. That fee did not go towards your eligible HCTC activities or the programs that you're providing to those experiencing homelessness. It went to a third party that, used that as a payment for whatever processing that occurred. However, if a donor does not cover a fee that is, you have to actually pick up and cover the fee, then that donor's HCTC contribution is not reduced. So that fee amount is not deducted from the HCTC contribution. Basically, you as the nonprofit maybe have to cover the fee, but the donor is not penalized for that amount. They're honored for their intended donation amount for your organization. Some examples of this. So Edward Jones, if they liquidate your stock and they have fees, or another broker, then those fees are not deducted from the fair market value that is determined for that stock donation. That's just something that you as the organization need to pay Edward Jones, but not necessarily, but is not reduced for the contribution amount for the donor. Same thing for credit card processing fees. And then Colorado gifts fees are deducted before they are transferred to your organization. So in this situation, you may receive a gift of $95. And then if you look into it, that donor actually originally gave $100, but Colorado subtracted that $5 fee before they transferred it to you. So in that situation, the donor would have a $100 contribution that would be eligible for HCTC. And so just keeping note of that to honor the donor's intended amount in these situations. Any questions on fees? All right. Switching gears, I'm going to give a few program reminders to kind of wrap up here. It's already April. It's April 2nd. Uh, so we did miss April Fool's Day yesterday, but wanted to remind you to go ahead and start getting your contributions in that came in during January, February, and March. So those submissions are going to be due by the end of this month, for everyone. And so if you did have donors who gave qualifying contributions, go ahead and get those submitted. If you are an organization that uses the quarterly certificate timeframe, your quarterly certificates will be produced on May 1st, and you will need to go ahead and send those out after May 1st. So just a plug for that. There is also a Salesforce glitch that has occurred. And so the donor contributions form, so not everyone uses the donor contribution form, but for those that do, it's not currently allowing attachments. So if someone gives, $5,001 or more, it's going to require that attachment, but currently there's an error that occurs if the donor tries to submit that contribution. The Office of IT is currently troubleshooting it. I'm hoping a solution might be in by the end of next week. But we will send an email or a newsletter that includes the update when it is working again. So just be looking for your email on when that resolution comes through. I also wanted to make a note regarding Proofpoint. So Proofpoint is the name of DOLA's email encryption software. And this is an important tool because it encrypts the emails that we send to you that includes donors' personal information. So we want to really safeguard donors' personal identifying information. The donors are trusting us with it, and so that's why we're using this software, and we expect you to do the same if you ever need to email their personal information. And so Just wanted to give you a heads up on this, that it's not phishing, it's not someone spoofing to be Lonnie or myself. It's just the name of the software, and it does require you to have a login. And so you log in, and it's an encrypted place where you can email back and forth personal information. Sometimes we do need to do this for correcting or checking data that is submitted for tax credits. So please open all email messages in a timely manner when we send them via Proofpoint. Hey, and then Brenda, your question regarding if a contribution through a credit card processor is $100 and there's a $5 fee, the HCTC would be submitted for $100. That's correct. If it depends on who paid for that fee. So if their $100 includes the fee amount and they knew they were covering the fee, then it would not be eligible for HCTC. But if that $5 fee is assessed to you, like with the Colorado Gives example, then you would honor, the donor's $100 gift. But if they gave the fee and they knew they were paying, and there was a credit card amount that they opted into covering, then that would not be covered. So I'm thinking of like if the processor, if they gave a $95 gift and opted into covering $5 more for the processing fee, then that would not be eligible for HCTC. So Julie asked, how do we know when to subtract the credit card fee? So I think you can think about it in this way as well. Did the donor pay for the fee, or did you as the nonprofit pay for the fee? So if they give $100 and and the fee and they and the fee is included in that $100 amount, and so your organization um receives, whatever it is, $95. If they opted to cover the fee, like I'm thinking about PayPal, for example, those fees are pretty clear. And so I'm not sure if you have another payment processor that you're thinking about. It sounds like you do, but I would look at, okay, Brenda is saying if the donor opts to pay the fee, the donor will qualify for the full amount. The contribution makes sense how you explained it. So it's actually the opposite. So if they choose to pay the fee and they know it's going to the payment processor, then that's not that's not eligible for HCTC. And so um it's very hard for me to find the words to explain it clearly. Um, but yeah, I'm thinking about PayPal, for example. It's very clear on PayPal, okay, you're going to transfer $100 to this person, and then PayPal upcharges them, whatever, $5. And so they end up paying $105, but you as the organization only receive $100 because they opted to pay for that fee. An example of where they do have a clear option of choosing to cover the fee or not is Colorado Gives. So if you have another example, I might could speak to that example. Carter, yes, just if the fee is not included, the rest of the donation would be still eligible, yes. In the original example, it was $100 question. So in the original question in the chat, it was $100 donation. And so that's why that would pretty much do, if $5 of that was a fee that they covered, then that would not be eligible at all because HCTC requires a $100 donation as a minimum. So that's why I said that at the beginning. But yeah, if it's a, $200 donation, they opt to cover the fee within that, then that's eligible for 195. So yeah, sorry. Sorry, Brenda and Julie, but if you have another payment processor example, I can maybe speak to that. But yeah, like when I'm thinking about PayPal or Colorado Gives, those are kind of more clear answers.
Um, can you hear me? That
Yes. Mm-hmm.
and I don't know if this is helpful to folks. I just disregard the fee no matter what. So it without having to look through the payment processor, I just look at however the report comes out, what did the donor intend to give, regardless of fees. So if whether they covered it or not, what was the donor's intent, and then disregarding the fees period helps me figure out what the HCTC credit is. That's just how I think about it. I'm not sure if that's helpful.
Yeah. Yeah. The donor's intent is what we're looking at there. So if they knowingly covered a fee, make sure that fee is not included in the HCTC amount. And then if they intentionally did not cover a fee, like the Colorado Gives example, there's a clear option for them to cover a fee or not. I would just add on to what Deanna said is making sure that you're looking in that intended amount that they gave originally, not necessarily what hits your bank account. Because if they gave 100, Colorado Gives took out $5, you want to credit them for that $100 amount. Yeah, and if you do have questions on this in the future, feel free to reach out. Happy to do that. Any other questions? I do have a couple other items. I wanted to share a couple small changes to the HCTC website. So the main page looks the same for the most part. And then if you scroll down here to more information, you can see where this information was it used to be all on the same page. Now we've broken it out into 3 different pages based on the audiences for that. So if you're looking for information for you, for HCTC, just click on information for participating organizations, and you'll have all of your resources there as usual. We're hoping this helps with donors who come to the site and they look at this information and think it's meant for them when it's actually meant for you. So hoping it helps out with that, but wanted to give you a heads up if you notice, oh, this looks really different. We've gotten a few tax filing questions. And the frequently asked questions we do get are in the frequently asked questions linked on this slide, but they're also included on the HCTC website here. And so on page 23 and following, you can find tax filing information if you do have donors that have questions on that. The next office hours we hope to have in June. This topic was based on a question that came in last time. So if you do have a topic that you want clarity on, or just more training on, definitely go ahead and put that in the chat. Let us know if you want to think about it a little bit and get back to us. We're happy to do that, but otherwise we'll just try to pick a question that we get regarding HCTC, and we'll make that as the topic for next time. So feel free to send suggestions to us. We will have an orientation probably this month for new staff. So if you want a refresher on HCTC, or if you have new staff who never went to an orientation that would be interested, please send us an email, and we're happy to do that, and make sure that you're included on that invitation. I am going ahead and putting our email address in the chat for HCTC questions. So at this time, we'll go ahead and stop recording, and we'll be able to field if you have any other questions that you want to ask.